Welcome to FOMC, gang. Interesting day so far. Bitcoin's made a little bit of a move to the downside, and tonight we're going to be welcoming in the interest rate cut. I mean, the word on the street across the board, ladies and gentlemen, it doesn't look like it's very promising, to say the least. They don't know what to expect. The markets are just all over the spot. You can see NASDAQ, S&P going up, going down. Bitcoin's doing all right. It's holding at this 60K zone. Are we going to get the biggest pump of our lives, or are we just going to see Bitcoin go down to the depths of hell? So tonight's structure, what we're going to do. In the next hour or so, well, in the next hour and 10 minutes, we will be revealing the FOMC statement, the economic projections, and then, of course, the federal funds rate. Now, it's important that we are focused on that moment in time because we're going to know exactly where we stand with the interest rate. So that's the first thing that comes out at 7 p.m. GMT UK time, which is 2 p.m. Eastern Standard. 30 minutes later, that's when we will have the press conference where we're going to arrange the live stream in such a way so that we're going to be able to see and watch what Powell is saying, my reaction, and of course, the charts in the background with a little bit of depth of market down below, just to keep an eye out on the orders that are going to be coming into Bitcoin at that point in time. The meeting itself is going to last around from start to finish. We're probably looking at about 8 p.m., which will be about 3 p.m. Eastern Standard. And when we start seeing that the questions start to become a bit pointless and they start asking about the environment and what have you, no disrespect to anyone that's all about the environment and climate change, we want to know what they plan on doing with money first before we understand how many trees they're going to be cutting or planting. These are more pressing matters. Not to say that anyway, we park the idea of that, okay? So it's going to be an eventful evening, to say the least, right? And if you're all getting ready to trade, that's the question. How many of you already have exposure in the charts? I'm not trading, but I would want to take on some risk. But the problem is, when you're trading the NASDAQ during these times, the depth of market can be a little bit crazy. We can see 150, 200 tick moves like no tomorrow, especially during these moments. So for me, I'm probably going to start trading tomorrow unless I actually see some decent commitment from the data that would suggest, yes, we're going to get the cuts that we want in the future. We know we're getting a cut today. Today, the Fed pivots. And it's a very monumental time in the charts. So hopefully, if I do see what I like, then I'm going to take a trade. If not, I'm not going to take the risk. In my head, I don't want to take no trades because I don't trade these sort of environments. Because I'm looking for surefire moves. Frankly, it's a gamble. But if you've got risk on right now and you've got decent profit, as we go into the FOMC itself, there will be some volatility coming into the charts, mainly with the legacy assets such as the NASDAQ, the S&P, and of course, the euro, foreign exchange, and what have you. I would say you want to be paying attention to what the bonds are doing. If we see the Japanese bonds climbing up, that's no good. If we see the US bonds climbing up, that's no good. If we see the yields shoot up, that's even worse, okay? So what an ideal scenario for me would be is if the Japanese yen goes down, the dollar in principle moving up, but risk is put on, which means that assets like the NASDAQ and the S&P and of course Bitcoin fundamentally would be going up because it's good news. We're going to get cheaper money in the future, okay? But how valuable is that cheap money? And that's what we're playing with right now. So what we're going to do, we're going to scour the net and have a look at where we are in terms of traders' sentiment. What are we going to be expecting from today's FOMC Live? Okay, we're going to be listening to key words that Powell is going to be suggesting. Overall, we want to be hearing that the majority of the members of the Federal Reserve are in favor of higher rate cuts. If we hear words such as all and or most, all and most, two key words. If Jerome says all the members of the board are in agreement that we should be cutting the rates more aggressively going into the next Federal Reserve meeting, that means that everyone on the board is favoring a somewhat dovish stance. But if it's mix and match, I mean, you had a previous Fed chair member saying that we should get 50 basis point cuts, all right? But that's a previous member. We need to be focusing on who is a current member right now and their importance, because ultimately they're all going to be voting. Waller, Bear with me a second, ladies and gentlemen. 2 seconds. That is unbelievable. I have to take this call. I don't believe it's happened right now. Bear with me a second, ladies and gentlemen. Let's get these charts up and sort this out. 2 seconds. Well, ladies and gentlemen, I knew that was going to happen. But nonetheless, let's get back into it. Let's get into the charts. Who's calling who? Yeah, sorry about that. No problem. All right, then, cool. Oh, my days. That's unbelievable. It wasn't Sam. No, it wasn't Sam. But nonetheless, let's get with this program. Let's have a look. I want to take some questions while we're getting ready for the FOMC Live itself, just to give you a little bit of insight into what we're going to be looking like. Actually, no, I'm going to show you when we've got it done. Okay, here we go. So as it stands right now, going into the news announcements, you can see everyone. Look, stock traders are hitting the hold button in the run up to Powell. Everyone is waiting to effectively place trades on what's going to happen. Now, just quickly going over across the asset classes across the board, we've got Bitcoin trading at 60K, all right? Euro currently holding out inside of these ranges over here. You've got gold as well. You've also got Tesla. Let's have a look at Tesla, how stock's doing. They're trading sideways, not any real activity going off. NASDAQ itself, look at this, wild behavior, stop run low to the upside, straight back. I mean, NASDAQ does this all the time. So for anyone, this is why I trade NASDAQ, because this is exactly what we're getting every single time. Just look at these plays. You got a move here, you got a move here, and this move right here. And look, it's all starting with these candlesticks. Red candle, green candle formation, red candle, green candle formation. They do it all the time. So platinum members, this is why I trade NASDAQ, because she repeats the same thing over and over again, okay? But just having a look at where we are across the board, ladies and gentlemen, going into the article, I can't stress it enough, okay? You are effectively, it's a gamble. It really is, okay? Statistically, we know that they're going to give us 5.25%, but what we don't know is how is the market going to react to the cut. Now, if we do get an interest rate cut of 50 basis points, because they're telling everyone right here, see that 5.25%? They're telling everyone we're only getting 25%. Okay? I don't like the look of that. We need 50 basis points because Friday is going to be a big day. I've said it once and I'll say it again. Please, if you're going to leave this live stream and never come here again, please monitor the Japanese yen. The Japanese yen is going to give us an insight into what they could effectively be getting ready for later. Okay? FOMC today, and then in 2 days on Friday, Japan are going to tell us if they're going to be hawkish or not. The Japanese bonds, they seem to be doing okay. They're still stuck in this range right now. Go to the 10-year bonds. They look like they've been coming down, but now they look like they want to try and come back up a little bit. But going to the yen futures, they're holding out. And the bets for traders favoring the value of the yen to go up has shot up significantly. There's many long positions on the yen. I don't like that, because that could mean that we've got ourselves a problem with the yen coming into play here with these red vector candles. They could be giving us clue as to what could be happening later on, ladies and gentlemen. And that is my concern right now. Okay? Big concern. Any questions from any of you for the time being? And by the way, my goal today is to get to 1,000 likes. That's what I want today. If we can get 1,000 likes in the live stream, I'll be truly grateful for that. And there'll be another live stream coming through to you all from the car. We're going to be going mobile. So I know you enjoyed that before. So we're going to be doing it again. Probably have a coffee this time and we'll talk charts. But I ain't going to be looking at no charts. I'll just be relaying levels and price points for you whilst I'm on the move. So yeah, that's the deal right now, ladies and gentlemen. Okay, so questions. Okay, Tino, I have a question. Why are you saying if the yen shoots up, we have a problem? And what have you, as a trader, weren't you supposed to embrace both sides of the trades? You've got to understand something. The yen principle itself is the carry trade because they borrow a cheap asset, which is the yen. And then they then convert that yen into dollars, use those dollars and put them into assets. That's why when the yen keeps on depreciating, the dollar keeps on going up, the stock market keeps going up, okay? Because they're borrowing cheap money and then using that cheap money and putting it to work. Now, if the yen goes up, it means that they're not exercising that transaction. That means they're unwinding $4 trillion worth of money that's tied up into the stock market. You've got to understand this move to the upside in the NASDAQ, okay, going into the daily time frame itself. This is approximately around $6 trillion worth of liquidity going into the stock market, okay? Now, that's $6 trillion there or thereabouts. If the carry trade principle is $4 trillion of it, that means that the market in principle is going to be correcting from these ranges. We're due a correction, but how much of a correction are we going to get? And naturally, as a trader, you say I should be taking in both sides of the story. I am. Because if the story suggests that the yen is going to be appreciating, we're going to get ready for shorts, ladies and gentlemen. If the yen doesn't appreciate, then we're getting ready for longs. Because if the yen goes down, that means they're selling yen, converting it into dollars to put those dollars to work. Okay? And that's what's really important for us. So I hope that answers your question. Tino, what if the Fed doesn't pivot today? Do you know what? If the Fed does not pivot at all today and they keep the rates at 5.5% or exactly what it was, because if we just go over into it right now, the federal funds rate as it stands, federal funds rate right here is roughly around 5.33%. Okay, remember it's between the range of 5.25% and 5.5%. Okay, as it stands right now, it's currently in at 5.33%. Okay, if they do nothing and they play that BS story about data, well, what data do you need? You've got a contracting economy. Manufacturing sector is already contracting by 5 months. You've got a depleting labor market, okay? Well, it's not this chart, but a depleting labor market. And tomorrow you have yourself the unemployment claims data. Now, unemployment claims data comes in tomorrow at 1:30, and that is effectively going to be telling us 230,000. They're keeping it in line with the same from last week's reading, okay? But if that unemployment claims data comes in higher, what more does the Fed need? Here's an alarm bell for you. All right? Debt clock. Okay? Oh my God, Tino. Debt clock US, debt US. There you go. What more data do you need when you owe $35 trillion and counting? Secret window tonight at 6 p.m. Very good. But this is all the statistics about the US, hypothetically. You know, the deficit budget is increasing. The US, for every dollar it makes, owes 126% on top. Come on. What more data do you need, Jerome Powell? Doesn't make sense. Bitcoin has been bullish whenever the interest rate has been fixed. Why do you think it will rise this time when the interest rate starts to decrease? Principally, you exchange dollars to Bitcoin. The idea of Bitcoin is we favor a much better currency. Fiat is done, okay? So logic says that you need to sell your dollars into Bitcoin. What are you exchanging Bitcoin with? You're not buying Bitcoin with Bitcoin. You're certainly not buying Bitcoin with XRP, although I do think that would be a wise move, but that's me. But anyways. But the reason why the idea of the Fed cutting the interest rates is good for Bitcoin is because you've got Wall Street in crypto, whether you like to admit it or not. You go back in the live streams, ladies and gentlemen. We've said it before. When Wall Street starts putting its hands into cryptocurrency, we're going to start thinking like Wall Street, not crypto. That's the sad truth. Unfortunately, that's the sad truth. Since when has an FOMC or should an FOMC affect Bitcoin? It shouldn't. Should the unemployment claims data affect Bitcoin? No, it shouldn't. Because crypto is crypto. It's to its own. What happened to decentralization? Now we make a song and dance about BlackRock buying Bitcoin. Doesn't make sense, does it? Again, I'm one of the people that believes that Bitcoin should have been 100K a long time ago. And there's a lot of other people that thought Bitcoin should be 100K a long time ago. But it hasn't been the case. They don't care, Tino. If they did, they would have addressed the debt issue years ago. Well, look, quite frankly, if you can print, okay, and given that the dollar moved away from the gold standard. And listen, another thing as well, this brick story, the idea of the bricks. Do you understand what they buy dollars in? Just look at the dollar right now, okay? The dollar itself has been depreciating quite significantly. So is it now a good time to buy Bitcoin? Principally, no. It's not. Because you're not able to pick up more Bitcoin. Isn't that the goal? To have a better yielding Bitcoin, to have more Bitcoin. Your dollar's worthless. It's appreciated by 0.4%. Now, let's just go back a few months ago, okay? Not even a few months ago. July. Okay, let's go with July. July, dollar itself was nearly 6% appreciated. That's brilliant, isn't it? So now you're buying more Bitcoin because of the value of your dollar, okay? If you're buying Bitcoin now at 0.4%, it's not really helping you now, is it? It's not really giving you a good value for making that investment. Now, park the idea of people, getting into cryptocurrency for the purpose of cryptocurrency. I mean it for the tech, right? If your dollar, which is what you're transacting in, is not strong enough, it seems pointless picking up the Bitcoin, which could suggest that if the dollar shoots up, Bitcoin could be poised to go down even more. So you need a stronger dollar to get more Bitcoin. And if that's truly the goal of these bigger players, they're going to purposely wait for Bitcoin to go down. Now, analysts on the street are saying that Bitcoin could go down to 49K. On the back of that, that means dollar in principle should be marking up. Now, if we see a 1% increase on the dollar itself, 1% would take us towards around an appreciation of around, just roughly around 2% up here, okay? 1.5% increase in price. So let's assume that the dollar shoots up tonight, okay? And we get a 2% appreciation. Is that enough for an investor to say, you know what, I'm happy with that, I'm going to buy Bitcoin? What price or value of dollar are you prepared to commit to buying Bitcoin? People won't look at it like that. They just want Bitcoin, they want Bitcoin. But when you start looking at Bitcoin from the perspective of how many dollars do I need to get myself enough Bitcoin worthy of it, then you start thinking about things differently. You're not thinking about what the holders are doing or what the miners are doing. You're not paying attention to that. You're looking at it from the perspective of dollars because that's what we're using. And again, bricks. I don't care what anyone says about bricks. You can create whatever currency you want and you want to come away from the standard of the dollar. Well, when you untie all your investments away from the dollar, then you're going to have a much stronger bricks. But because 90% of the guys involved in bricks are all tied up in dollars, they ain't going to crash the one currency that 90% of their wealth is tied up in. Doesn't make sense. That's my logic. Tino, this overaccumulation of Bitcoins can give prices beyond market expectations, like 130,000. There is a possibility that Bitcoin can go to that. And yes, the issue that I've got is you've got the OTC markets where miners have been planting Bitcoin over there to sell. And the reason for that is because they don't want to alert the spot markets, because people will see that there's lots of Bitcoin supply coming into the spot market. They're seeking liquidity because they're going into exchanges, okay? The OTC market is a case of someone walking down the OTC market and saying, oh, what we got over here? Oh, we got some euros over there, and we got some dollars over there. We got some Bitcoin over there. How much you got there? We got about 30,000 Bitcoin coins. Okay, I'll just take a few of those coins, and it doesn't disrupt the marketplace, okay? And that's another problem we've got. Now, principally, we assume that the supply of Bitcoin should be, it's a 21 million supply. Why is it not hit 100K yet? And it just tells me that it's the same Bitcoin is just moving from one person to the next, like the same supply. We're stuck at $2 trillion market cap. Where are we at with some statistics right now? Let me just go over to this one right here. Currently, right now, 24-hour volume on cryptocurrency is roughly about 110 billion per se. Okay, so not really that much. And we've got the liquidations right now are poised to the idea that people believe that Bitcoin should be going lower. okay? Going over into the bids and the offers, you can see on the 12-hour time frame, we have been getting hit quite significantly on the short liquidations. And if we just have a look at some orders, if you zoom into this, you can see that you've got a little order right here of 1.87 million, but there's nothing really much inside of these ranges right here, which is okay. That's good news for me. The less bids I see below, the more likely we're going to see prices trying to climb tonight, okay? Going in closer over here, you can see that we've got a bit of an order down here at 2.96 million. And yesterday we had some orders coming into play. Nothing really significant. 15 million was bidded at 59,800. Now, quickly going over into the depth of market, just to have a look at how Bitcoin's price has been behaving. I'm just going to put this over here for you all so you can see. And then we have got Bitcoin right here. So in front of you, I'm going to be looking at Bitcoin's order flow in principle, which is going to be revealing to me where is value. And that's very important for me. So what I'm seeing here with Bitcoin is and this is the question you got to ask yourself when you're trading with order flow and the hybrid system, right? You see these red lines. These red lines here represent points of control. And this is where there is an agreement between buyers and sellers and they're happy with the way things are going, okay? Notice how Bitcoin is stuck inside of this range, okay? So like 2 points down here, and you've got these 2 points right here. It just seems like it's stuck. And that's been the case for Bitcoin. Now, value all the way up here, which takes us to around the 66K region. And then when we start going over all the way over to the all-time high zone, the all-time high doesn't really have, I haven't gone back that far, okay? But let's just take the 70K zone, okay? 70,100. By the depth of market and the profile, you can see that you've got lots of people trapped up here at 70,000, okay? Now, the market hasn't seen that point for quite some time, and you can see these here. These blue lines are initial balances, and the rest of these blue lines are initial balances where there has been an exchange between buyers and sellers in the first hour of the market open. And usually what it says is if the initial balance dictates that price is favoring higher prices, then when it moves away from it aggressively, the rest of the session is going to probably lead prices to move away from it. Now, when we look at Bitcoin's current initial balance today, we are currently trading below the initial balance. So this is where most of the liquidity was currently sat with Bitcoin, okay? We are at the point of control right now with Bitcoin from that perspective. And looking at it over here with regards to the depth of market, we're currently around the point of control, and price tends to stay around 70% of the time. It stays around the point of control. But today we've got the VWAP and the point of control together. That just tells you there's no movement. There's literally no movement. Going into Bitcoin's price right now, just to have a look at where we are, you know, it's not really doing much, ladies and gentlemen. It's a 15-hour time frame. Go to the hour time frame. Who's trading that? Go on. Who's trading that? Who is trading this? It's horrible. Horrible price action. And I look at it and I think, I'm glad I'm not trading it. I mean, going over to the NASDAQ for a second, bloody back to square one. It's not doing anything. Any questions from that? Okay. Man, you're stuck with this three-month chart, aren't you? Aussie yen has been an uptrend. What does this mean in terms of Bitcoin? Well, what it means is if the Aussie yen's been going up, that means there is people transacting on the back of on the back of dollar, and they're buying Aussie because dollar is cheaper. Okay. So they're getting their dollars, borrowing US dollars, selling it to get Aussie. So what you're witnessing in the NASDAQ and the S&P right now could be accumulation in preparation for a rally to come. Okay. Now, when you think about it, if the Aussie yen carry trade principle is actually happening as we speak, the only thing that would trigger Aussie to come down, which means that the dollar will end up being expensive, is if the Fed doesn't give us the rate cut that we want. Because the market wants higher rate cuts, but at the same time, it kind of doesn't if we are more skewed to a Aussie yen carry trade or just the yen carry trade. Okay. Are they borrowing yen and converting it into dollars? Or are they borrowing dollars to convert it to yen? Stick with me. Look at the yen. Are they, in principle, borrowing yen? No, they're not. They're not borrowing yen because the yen is appreciating. That means they're selling other assets that were in dollars and putting it back into yen because yen's got expensive because they've increased their interest rate? Are they borrowing dollars to put into Aussie? Looks like it, because Aussie has been in a relatively decent uptrend. So far, so good. Okay? So you can make the assumption that they're borrowing dollars. Why? Because it's cheaper right now. Think about it. Or it's going to get cheaper with the interest rate cuts. So if Aussie yen is moving up, principle says that they're borrowing dollars and converting it to Aussie, which means that the stock market is going to be going up. So then let's just go and have a look at the NASDAQ against Aussie, all right? Aussie going up, NASDAQ moving up. Let's go and add the S&P. Click that. S&P going up, happy days. All right, stick with me on this one. Let's go add the dollar. What are they doing? Dollar's the purple line. Let me just change that up so it's clearer for you all. There you go. So you've got NASDAQ pink line, S&P, NASDAQ and S&P are these two lines right here. And then you've got the dollar down here. Aussie yen is in the middle. So Aussie yen moving up, NASDAQ and S&P moving up. Dollar going down. They're exchanging dollars for Aussie to put on risk. Okay? This is why it's so important that you understand or follow at least the true concept of what Forex is about. Perceived value. How many dollars can I buy right now with my yen? How many dollars can I buy right now with my euros? How many dollars can I buy right now with my pound? That's what a hedge fund is thinking, because they're profiting from the difference. You had one economist who went to France, okay, quite a while ago. And he said that he believed that the euro was heavily overvalued. And it was only because he was paying for coffee. So this analyst was like, you know what? The euro is way too strong right now. I'm paying this much for coffee? What the hell? What's going on here? He goes back and gets himself a position short on the euro. Euro slumps. So this was all from the basis of a cup of coffee. Obviously, other factors do come into play. Okay? But in principle, the same logic is happening right here. All right? With these currencies moving up, such as the Aussie, and the NASDAQ and the S&P moving up at the same time, with the dollar going down, there's going to be a change soon because there's going to be some profit taking. But then you say to yourself, hold on, if the dollar's going to get cheaper in the future, surely the Aussie's going to keep moving up, which is why they're all saying that the stock market could actually keep on going up even after the Fed does pivot, which historically it does, between 5 and 16%. That's usually what happens. It likes to pump up after a Fed pivot, and then it starts to roll. When you understand this logic, ladies and gentlemen, it makes life so much easier for you to then come to the charts and say, should I be buying Bitcoin today or not? Now, this is over a period of time, of course, understanding the carry trade principle. But the carry is a massive thing. Right now, we've got two carries. One looks like it's working because NASDAQ, S&P are going up. And principally, you should be seeing Bitcoin going up, but it looks like they're not exchanging their dollars for Bitcoin. Just the same people in crypto buying up Bitcoin. You know, when one whale's selling, another's buying. Still the same Bitcoin. So it's just basically moving. That's the problem we have. Tony, happy days. That's good. Tina, the way you can just reel it off in a logical way is very impressive. Thank you very much. If that makes sense to you, let me know, because it's economics. It's not so much economics, ladies and gentlemen. It's not economics per se. It's just understanding the flow of liquidity. Why does euro go up against the dollar? Okay, well, euro makes up 56% of the dollar dominance. Why is that important for me? Well, I need to make sure I'm aware of that, because when the yen goes up, the euro goes up. Okay, very important. Tina, how about we get a situation like in 2007 when we get 50 basis points, rally into October, then the market's top and we tank hard? Well, does anybody remember what happened in 2007, 2008? I was in Cyprus at the time, and I was sat outside, and I witnessed Sky News turn around and say, we have a problem in the US. There is a subprime mortgage concern. and these mortgages are not being repaid. There's a lot of defaults. And then they went on to talk about cricket straight afterwards. But that was in September. Then, the meantime, whilst all of that was happening, oil was rallying up. And then oil went up to that significant price point of $150 a barrel. And then yippee-ki-yay, everything tanked. When you see commodities climbing up, you know it's going to hit the fan. Look at gold. Where is gold right now? There you go. Gold is at some significant highs right now. All right. Making significant highs. And there is a possibility that what you've got to understand, when you look at gold after financial events, you always end up seeing gold dropping once the financial event has been processed. Okay. So you go back and look at the subprime mortgage crisis. Just before it all fully came into play and everyone accepted that we've got a problem, that's when gold dropped. When oil hit $150 a barrel, that's when it dropped, when we all came to the understanding that the markets were going to crash and there is a financial collapse happening as we speak kind of story, okay? But prior to the buildup of it, gold and oil were just climbing and climbing and climbing. That was equity hedge investors offsetting and getting rid of their exposure so that when gold collapses and they start buying gold and they start buying oil, okay, they are effectively setting themselves up for the next hedge. Remember, hedge investors, they have to protect their balances. And they do that by taking advantage of the masses. Gold is at all-time highs. I've said it. When they start talking about gold going to all-time highs and you start seeing it in the news articles, that's the best time for you to be very cautious about what you are buying. Gold is not one of them. Gold is at all-time highs. It's suggestive that people are going to gold as a safe haven. The true safe haven, ladies and gentlemen, in my logic, is the Japanese yen. And when that keeps on going up, it means that investors ain't liking the story. It's fundamentally, it's a safe haven. It's cheap to own, okay? And you can get lots of it. And then, of course, put it to work because the interest rates are so low. You've got to pump. Have I got a pump in Bitcoin? No, there's not that much of a pump in Bitcoin. But don't worry, ladies and gentlemen, what time are we on? We have got effectively nearly 40 minutes until the FOMC. Well, it's actually an hour and 10 minutes until the actual press conference itself. But we're going to be going into the minutes very shortly. Well, 40 minutes. So again, any questions? Hit the like button, ladies and gentlemen. 711 of you have only liked the stream. But how many of you are new to today's live stream passing through? I hope you're enjoying yourself so far, so good, because when Pal starts talking, I'm going to be paying attention to him. And we have a little bit of a laugh and joke in the stream. See how many times he coughs, how many times he hesitates. And we really try and understand from the speakers, the people asking the questions, are they really asking those provocative questions for Pal? And if you go back to the last couple of FOMCs, Pal was very scripted. He kept on regurgitating this one script that he kept on saying all the time. Today is all about keywords. All or most, some, future, data. That's what the algorithm's going to be picking up on. Okay? Okay then. So, Tino, do you think they'll reduce the interest rate by 0.75? If they give us 75 basis points, ladies and gentlemen, the market won't know what to do. It really won't know what to do. They will never do that. They would never do that. The last time a country bank did that, okay, was the Swiss franc. They were expected to cut the interest rates. They didn't. They increased it. Oh my God. What was the other way around? I think it was. Either or, dollar collapsed against the Swiss franc. It collapsed overnight. 300, 400 pip move to the downside. You don't see those moves in Forex. You see that over like 2-3 months. Not in the open of a market 5 minutes in. Bloody hell. But yeah, that's what happened there. Tina, there was a good long scalp on Bitcoin earlier, green candle and on the 10-minute time frame. Then it goes up until it recovers the red vector around the 50 EMA. Okay. Tina, what are your thoughts about the BRICS payment system announcement? That's great news with the BRICS, but people are looking at the BRICS in the wrong way. Remember, who's behind the BRICS? Look at what they're invested in and then understand if the BRICS really is going to hold weight. It might be an alternative payment system like crypto, but dollar is king. Like I said to you before, when Starbucks, when Costa Coffee, Cafe Nero, when all your outlets that you can go and pay in dollars allow you the option to pay in crypto, then you've got yourself sustainability with cryptocurrency. But right now it's all about dollars because people can only communicate with dollars. It's like Visa, MasterCard. That's what I see BRICS as. Right, you want to come away from the standard of using dollar? All right, cool. They're just going to be buying and selling amongst themselves. Their economies would have to be, they're emerging markets, ladies and gentlemen, developing. All right? Their bonds are dead. That's why I'll show you right now. Okay? Just to put it into perspective, okay? World bonds. If I search for world bonds and what's the yields on that, okay? That's going to help you understand where we are in terms of bonds markets, okay? To get a good idea of it. Wait there. US bond. That should give me an understanding. I'm not seeing it. Okay. That'll make sense. World banks. So I can work it out for you, or just to present this idea. Okay. Right. Look at this. Okay. These are the main banks around the world. Okay. Their interest rates are very good. You've got high yields. Okay. But when I say high yields, we're talking in your 4s and your 5%, 2s and 3s. Okay. So that's all good. Okay. Then you've got these 10-year bond yields against other countries. Okay. Now, other countries are just Australia, India, UK, Germany, Taiwan. Those are, in my opinion, they hold relatively decent bonds, okay, in terms of yields. But Brazil, India, South Africa, China, what are their bond returns like? When you have got, all right, this is what I mean about it, yeah? US debt, largest holders of US debt, okay? Japan, the largest holder of US debt. China, the second largest holder of US debt. UK, the third largest holder of US debt. The countries running BRICS, no one's even bothered about their bonds, let alone get involved in a payment system that undermines the dollar. I'm not king dollar, I'm king opportunity. But that's what I'm saying about the BRICS. It's just an alternative payment system to get people away from the actual dollar itself. It's not going to happen. Not in this day and age. Not when there's only so much debt that they've got right there with the luxury of being able to print a little bit more. Wait till we start hearing about the debt ceiling being lifted again. Okay? That was 37 trillion a few months ago. Now it's down to 35. So it seems like they're doing okay, but it seems like it's climbing up again. So what do you want me to say? You know? So, you know, under conditions can we have a green vector candle towards 80 or 100 that doesn't recover anytime soon? It's an obscured question in principle. When I say obscured, it's like you're asking me, will we get a vector candle? The best way for you to do it, okay? Yeah, about that. The best way for you to look at a vector candle in principle, right, is to look at the whole and half numbers. So if you're a holder of Bitcoin, you should not be paying attention to Bitcoin at 59,700. You pay attention to Bitcoin at 62. You pay attention to Bitcoin at 61. You pay attention to Bitcoin at 63. And you just mark off these price levels throughout the chart. When you've done that, have a look at how price behaves every time it takes it. Okay? The more whole numbers Bitcoin breaks through with a vector candle, the greater chance that the vector candle is going to get recovered because it's an explosive move, okay? Looking at Nasdaq's pulling back down again. So try not to focus too much on, try not to look at a bigger picture as such because we'll never know. But we are going into something that's going to impact the bigger picture massively because we know dollar's going to be cheaper to obtain. But the idea is it going to be enough for people to say, you know what, I want to get Bitcoin now, but my dollar is deemed worthless. You would effectively have to go and get your dollars changed into euros, but you won't be getting that many euros, and then use your euros to go and buy your Bitcoin. But you're pretty much back to square one with a terrible dollar right now. It's so bad. Tino, in your opinion, in what stage are we regarding Bitcoin and TradeFi? Early? Also, looking at Bitcoin volume on spot Binance, can you explain why between May 2022 and March 2023 was it so extreme? Okay, then. May 23, March 23, you said. May 22 and March 23. Okay. So if we just go back into that point, reference point in the chart, what time are we on? Half an hour until it happens, ladies and gentlemen. Half an hour until this madness comes into play. You're not late. Listen, we haven't started the FOMC yet. Don't worry. I've got Powell right here. Where is it? He's waiting for us, so don't worry. He's waiting right there. I've told him to just sit tight for a few minutes before we actually start FOMC. So the difference with spot volume right now, I'll be frank with you, it was all ETF. It was anticipation of the ETF going into going up to January 2024. Okay. The idea of the ETF coming into play, the speculation itself was enough to just get Bitcoin to recover absolutely everything. At the same time, they were increasing the interest rates, thus making it more favorable for investors to load up on dollars and use a stronger dollar to buy assets because they're getting more of the asset with the strong dollar. Okay. So when you're looking at the spot volume, again, it's a difficult thing because they sold the Bitcoin here, but they were buying it. They've bought the Bitcoin whilst they've been dropping it, and now they're selling it. It's like it's the same amount. So realistically, has spot volume gone up? Physically, you can assume it has. You know, if it's today, it's 1 million. Tomorrow, it's 2 million. But it's the same Bitcoin. That's the problem we've got. You know, there's not enough people buying more of it. They're just buying the same amounts in the same range. Again, if miners keep on selling their Bitcoin, then they pretty much dictate what's going on, you know? Okay, any other questions? If your steering wheel is on the wrong side, does that also mean your mouse with the left hand? Right hand? What are you trying to get at there? What a guy. Any other questions? Can you shed some light on spotting hidden liquidity? What do you identify as liquidity? In my opinion, liquidity to me is areas in the chart where people were and area in the chart where people are. Okay? Areas in the chart that people had a conviction that were right, and an area in the chart where people had a conviction where they were wrong and they are in denial. The best way for you to identify hidden areas of liquidity when you look at it from higher time frame perspectives, okay, is you want to be looking at points of aggressive behavior, something like this. This is an aggressive zone. The market in principle will be going back to those sort of zones because they want to know how aggressive it really is. If I'm a market maker, if I'm a bidder of Bitcoin and I want to buy as much Bitcoin as possible, I'm going to start stepping in and buying Bitcoin when it gets to a significant area that I can buy Bitcoin. I can buy Bitcoin at any point in the chart, but I want to get a better feel at a specific price point, a certain amount of Bitcoin at a certain price point. Because if everyone is selling as Bitcoin's going down, that's perfect for me because then there is a supply coming into play. And the only way they can sell is if someone is there buying. This chart right here, ladies and gentlemen, EXO charts, what do you think we're paying attention to? We're paying attention to the bids and the offers. On the right, it's the offers. On the bids, it's the on the left, it's the bids. Okay. So when we're looking at these two price points right here, we are trying to establish the relationship between who's happy to buy and who's happy to sell. Right now, we got someone that wants to sell 708 contracts of Bitcoin below 60,000. So someone is waiting up there. And I've got my settings on here to tell me if that is something, any orders above 80 is all I'm interested in. I'm not interested in 0.005 Bitcoin. That's wasting my time. But I can see the book. Look, it's like they're prompting that there could be some volatility, that Bitcoin's going to break 60,500 just by the order book. This is where your hidden liquidity is. You're not going to know that when you're looking. You make the assumption that you look at these candlesticks and think, yeah, there's liquidity up here. Okay? But as it stands right now, I've got liquidity in this chart, and it shows me 726 at just below 60,000, so 59,990. Above that point, I've got 593 Bitcoin contracts at 60,500. Okay? These are people wanting to sell. So are we going to see price go up? That's what this is saying, assuming that they keep the orders present. Now, how do you understand if they're going to keep it present? Look at this here. This is the stack, the pull and stack on the chart, which effectively tells you I'm a dude and I've got orders in my pockets, right? I'm coming to Bitcoin's price and I'm like, what price is it at now? Okay. Give me that 10 grand. Just put it here for 5 seconds. Actually, no, come in. No, take it out. Actually, no, give me 20, put it there. Actually, wait, is it moving up? No, get rid of it. Move it. Actually, put it on. Stack it. Go. It looks like it's going to keep going up. I want to sell it. Stack it up. Okay? That right there, the pull and the stack is the commitment that people are believing is going to happen in the chart. So they want to put orders into the chart, into the book to get filled. That's what this is right here. So you can see here, 150 orders right there. They've been stacking. They're adding to the book. I want to get filled, which happens to be alongside that 818 contracts. So just for the nature of demonstration, if Bitcoin keeps on pumping up right now and tries to take out the 60K, it's only $30 away, okay? That person's going to sell. That could then trigger interest. What a perfect time to sell Bitcoin as it breaks the 60K, okay? 25 minutes. Look, that 150. Someone else is planting there. It's ready to add to it, okay? Because if the liquidity starts going in, the market's going to hold at this point. It should hold when they're trying to absorb that order, okay? Here we go. They're eating it, look, and they're adding at the same time. They're eating that liquidity, adding and taking. Look how it's pausing at that price point. They're adding to it. Look, 180, 179, 180, 200. So they're stacking. That means that right there is an area that if they can sustain and break, okay, then it's just going to try and climb up from that point. Now, for me as a depth of market trader, that's information for me. That's your liquidity. That's your hidden liquidity. Because we look at the chart, you wouldn't have a clue about it. You wouldn't even know that there's someone there trying to sell 1,000 contracts of Bitcoin. That's quite a lot of contracts. And look, that's stacking. The 10 grand guy, yeah? He keeps on stacking. Look, he's now just disappeared. That big order of 150 is now gone. He may have done his business, but look, that 700 contracts right there is still there. So it looks like there's a lot of sellers right there, okay? Now we need enough people to start building it to push it up. We need enough people to try and buy so that they can sell. Now, the further price moves away from it, the greater chance that this order then gets removed because he's got 700 contracts right there doing nothing. He wants to transact on that. And this is what we're going to be looking at in the actual FOMC press conference. You're going to be witnessing this sort of behavior happening over and over again. And if we can work out, based on commitment of the pull and the stack and the depth of market, if someone really wants to sell their Bitcoin, that logic then tells me that Bitcoin is going to shoot up during the press conference. It could actually shoot up in the next 25 minutes, ladies and gentlemen. This could be something that they're getting ready for. Does that make sense? So we're going to be paying attention. Look, it's now taken 620 now. It's come off. But remember, you witnessed a few moments ago that that order was there 150, and it stayed above the 700 mark and it went up to nearly 900 and then pulled back. So they kind of it's like they used that area to get a quick fill. It sounds crazy to anybody new. But again, I stare at this all the time. I use the depth of market all the time. And it aids me in understanding where liquidity is. Okay? And Any other questions, ladies and gentlemen? Because we're going to be getting the party started very, very soon. 25 to very shortly. Where are we at with the likes? Thank you very much, ladies and gentlemen. 1,000 likes. God bless you all. Thank you so much. Tino, is the picture on the... I'm not going to tell you. You got to work it out. Tino, what should go do if we get 25 cuts or 50 cuts? 50 points should be good for the dollar, isn't it? Principally, yes. Yeah, it is good for the dollar, but what we're waiting for is people's reaction to it. That's the issue. Okay? And is XRP going to be a BRICS coin? I couldn't tell you, bro. And if it is, I'm getting rid of it. Yeah, so it's... Look, Wall Street doesn't know what's going to happen. I hope I do come across as someone that at least has some form of an answer. At least I can give you some form of logic to put together. Some of you that have come into this live stream did not understand why the Aussie yen principle is very important for why the NASDAQ and the S&P could be going up. Now you do. So I know that you can leave here understanding that logic. When you're looking at your candlestick charting patterns or whatever softwares, algorithms you're using and what have you, you've now got fundamental logic to put to the test. You can now take whatever service you use, whatever indicator you use, and say, okay, the MACD, for example, is moving up. Okay. Can I justify that from a fundamental perspective? Well, Aussie yen is moving up. The dollar's going down. The Japanese yen is moving up. Interest rates are high in the dollar. They're looking to cut them. So it looks like dollar's going to end up getting more cheaper. That could then suggest the idea that Aussie is going to keep on climbing up. Aussie yen principle suggests that they're going to keep on buying Aussie and converting it or using it to buy assets. NASDAQ and S&P should be going up. That's the logic. That's what I think is going to be happening. So that's how you can use it. Can you start using CoinAnk for order flow, please? Well, I do use CoinAnk for order flow. I do look at it. What I look for with CoinAnk itself, ladies and gentlemen, is I look at the relationship between bids and offers. Who's buying, who's selling. Okay? So just to put it into perspective for you all. Okay? Iron, hold tight, my bro. So, look at this. When you look at the order flow, right? And this is for people that ideally for holders, okay? When you really want to have a good idea about Bitcoin's behavior. Now, I haven't got the historical data on there, but when you look at this all the time, you start to get a feel for the type of concentration of commitment. That means how many people are buying, how many people are selling, right? If you're of the belief that when prices are going down, it's because people are selling, you're focusing on the wrong people selling, okay? You're focusing on retail. We're not interested in retail because in order for retail to sell, someone has to be there and be like, I'll take that. Thank you very much. You want to pay attention to those guys, okay? So you can see that there's been a high concentration of buying in this area. We've now seen a high concentration of offers coming into play, which is this pink stuff. We've now got even more of a concentration of offers coming in. These are the people that are prepared to sell the Bitcoin right now. 18 million at 70,000. Okay. Let's go and closer look. In front of you here, we have got 1.8 million at 62. Okay. That's not enough for me. 8 million at 62,380. Okay. Inside here, you've got 1.5 million at, 7 million at 60,850. Okay. And then you've got this order right here of 3 million at 60,000. So let's look at this. That order is still there at 60K, all right, just below 60K. It seems like Bitcoin is stalling at the point of control. Most of the contracts are right there. There is a potential for Bitcoin's value to change because you've got 3,073 contracts right there, which is only 1,500 contracts more than the actual point of control, but only 1,100 contracts more than the point of control. In other words, value can change at any moment. Look, 3,818. So just shy of nearly 300 contracts more traded at the 59,990 point. The point of the VWAP, the point of control could adjust by nearly 800 contracts, okay? There or thereabouts, all right? That tells me value's changing. And if value changes and moves up, then that tells me people are in agreement to pay higher prices and be a happy medium from those points. These are things that when you look at this, you're getting an understanding of intention of how price can move. For those of you that are new to the live stream, go and watch the last few live streams where I've shown you my trading on the NASDAQ and the S&P. These are the logics that I'm putting together. I use exo charts, I use depth of market, I use the hybrid system, and that's my main focus, okay, on what I'm doing there. Ladies and gentlemen, bear with me a second. We'll start again. It's all good. No worries. Okay, then. So back to what we were talking about. Take it back. So we've got 15 minutes until the action starts. I'm not going to change the toilet. No, I'm not. The toilets. That's not the toilet. That's not the toilet. It's somewhere in the house, man. Something like that. But anyways, why are we talking about that? Any other questions? Okay, Tino, leverage is probably the worst thing that has happened to crypto. Inflated prices everywhere. Well, listen, it's because people aren't really using it properly, you know? People aren't using leverage properly. They get excited. Leverage is bad. It is bad. But if you use it properly, don't borrow too much of their money, okay? Keep it as cheaply as possible. Any other questions? Because we're going to get ourselves ready for the next 15 minutes, ladies and gentlemen, that we're going to hear the data coming out. Bank of Japan announced they considered the rate hike, but they don't mention when. Do you think, but they don't mention when. That's the thing with Japan. Do you think that they will do it immediately after the FOMC? Maybe too much volatility when this event is near FOMC. They don't care about when they decide to effectively put out the interest rate, okay? That it doesn't matter for them, okay? Ultimately, what they've got to look for in principle is they have to be looking at where they are in terms of commitment on the Japanese bonds market, okay? If the bonds market seem to be sustainably going up in their favor, then that means they're keeping the yield lower. And then the lower this is away from 1%, because if they do get to a yield of around 1%, then their GDP output is doubled, which makes it harder for them to really profit from doing business with the US. Okay, that's why they want to inflate the actual yen itself, because it's been deflated for such a long time, ladies and gentlemen. Look how much you can get on the yen, you know? Look at it. It's horrible. It's been, look at the last 7 months, ladies and gentlemen. These are 7-month candles, okay? Each candlestick is 7 months, okay? It's just badly going down. It's no good. And they need to do something about it to sustain their economy. And as they are the largest holder of US bonds, okay, it makes it easier for them to really play around with the carry trade. They know everyone's using the carry trade. They do the carry trade because remember, Japanese authorities had told all commercial and all corporate commercial companies in Japan, get rid of any dollars that you've got and turn it back into Japanese yen. They directed all of the companies, corporate companies in Japan, to get rid of their dollar risk and convert it back into yen. That was on the 5th of August. And that's why the markets completely sank. You know? So it's very interesting to see how they actually do play out with the Japanese yen. I'm waiting for that. That meeting on Friday is what I'm paying attention to. FOMC, we're going to hear a bit of data. We're going to see the interest rates. We're not going to get what we want. We're going to get what we want. The market's going to react. Then it's either going to be a double slap across the face. It really is. They're going to slap the market once, and then Japanese are going to turn around and be like, okay, so you're doing that to the bonds, okay? Our bonds are now profitable. All right, cool. We're going to increase our interest rate yet again. Oh my God, what does it do? It forces more people to go into the 10-year bonds, the US bonds. Remember, Japan holds the most. So they're making a profit right now. There's their profit. And they're taking a profit as well. They're offloading on their bonds. 10-year US bonds. It's been going up, man. It's a big, funny game. I'll tell you that now. It's a very funny game. Okay. We've effectively got 10 more minutes until the moment of truth. All right? What I'm then going to do is, man, everyone bloody wants me today. I don't believe it. Oh, look what's going on. The BTC's made a wake up. Here we go. So they've swept that order. Nice. Bitcoin swept it. What did I say a few moments ago? That 3,080 value's changing right there. It's now gone to 3,995. Okay. So that could be a very interesting time for us. Looks like it could actually happen. I'm looking forward to it. I really am. Okay. Tino, do a backflip. I'll do a backflip when we get 2,000 likes. Shoot. Did I just say that? No, listen. We've got to at least have a little bit of professionalism. Like a backflip. Come on, man. You need to do something else. I've already got a bad neck. I need to flip on that. Here we go. 20K God candle in 60 minutes. Look, this is what I'm talking about. Volatility coming into the marketplace very, very shortly. Okay. So, oh no, what's happened there? I don't believe this. When I leave, Bitcoin pumps. Okay. So if I disappear for another 5 minutes, then that should work. Are we good with that, ladies and gentlemen? It's doing things. It's good. Notice the orders. Look. Notice the orders. This is a pre-pump, ladies and gentlemen. Okay, so we got 300 orders right here. We got the 500 up there, 60,500. It could be a possibility that Bitcoin does actually make the move. Give me a second. Let me just go into smaller time frames to understand this move. Okay. Okay. There we are. No vectors just yet. Shall I go? Shall I just step away for like 2 more minutes, ladies and gentlemen? Just because every time I go, Bitcoin moves. Anyone got any coffee going? I mean, we've got literally 5 minutes until the FOMC press conference, the minutes and the projections come into play. It's going to be a very big mover, ladies and gentlemen. I do believe that it's going to be a big mover. Okay. Where are we in the bull run? Do you think we still have a Bitcoin bull run, altcoin run? I mean, I wouldn't be. The altcoin story itself is everyone's on the belief that Bitcoin dominance to go up. I mean, where's Bitcoin dominance right now? 58.56. All right. And they think that when Bitcoin dominance comes down, everyone's going to go into the altcoins. Well, the altcoins, technically, when Bitcoin was going down, we did see a little bit of success, but the actual altcoin market has not gone into altcoin season at all. Like, look, just look at this over here. Okay, I mean, we were in altcoin season December 2023 for like 5 minutes. I think Christmas, just after Christmas Day, and then it just slumped from there. Okay, we're nowhere near altcoin season in principle, but I don't think that the logic of Bitcoin going down and altcoins going up is going to be something that happens yet. I don't think it's going to be one of those things. I said it yesterday, where if Bitcoin goes down, everything goes down. And if Bitcoin goes up, everything goes up, because Wall Street is in crypto. And there's not many altcoins that people in Wall Street are buying. They're just buying because they're buying Ethereum or they're buying Bitcoin. They can only buy Ethereum and Bitcoin in terms of the ETF itself. Okay? So it's very, very interesting to see how everyone asks me that question about the altcoin market. Everyone's saying that the Bitcoin cycles are done. Well, if one of them's based on the rainbow logarithmic chart itself, like, how are you presenting that to a board of investors? Buy this Bitcoin because it's at the point where it's on a fire sale. Use that in the board meeting. Anyways. Will never happen. Alts need Bitcoin. That's true. Before alt season, Bitcoin will have to make a pretty big move from here. Tina, will you be as great as I'll live longer than Jesse Livermore because he killed himself over his wife. So I think it's about just don't have a wife, and then you'll live longer. Is that not the case? A monetary roller coaster will start with the Fed's probable decision to cut interest rates on today and finish on Friday with the outcome of Bank of Japan's meeting. That's exactly what I'm waiting for. You know, I'm waiting for that. Tino is Italian. I'm Greek, man. Come on. All right, ladies and gentlemen, we've got 4 minutes. Let's do a check. 1,600 likes, mad love and respect. 3,500 of you passing through to the live stream. How many of you are new? How many of you are new to this live? Because we're going to be getting the power flavor coming up very shortly, ladies and gentlemen. He's waiting. I'm waiting to do that. No cut would be fun. It really would. No cut would be pretty exciting, to say the least. It really would. I'm shorting. Oh God, who's playing shorts? You're new. Welcome to the channel, ladies and gentlemen. If you are new, I know I've been making reference to a lot of things on here, so just get over to tradersreality.com. It's pinned to the top of the chat. and you'll get a little bit of flavor about what this live stream is all about. I'm consistent with my lives. I'm always bloody live. I'm always talking about this nut job of an asset, but we do focus on other assets like NASDAQ, S&P, and the importance of it, as you've seen this evening. And we ain't even into the FOMC itself. We're going to see some flavor very, very shortly, ladies and gentlemen. So I'm looking at NASDAQ. I really want to take a trade, but I'm not, because I have to be very, very focused. I just think we're going to see some wild behavior very shortly. Bitcoin hasn't even been able to take the daily open. So if you are new, trying to make sense of the madness which will be unfolding in the next 2 minutes, get over to tradersreality.com and go take the free course. There's a free course on there on breaking down the hybrid system. It's only an hour. You've been here for an hour already. I've been telling you how I use it. This will tell you how to use it, okay? And break it all down for you. You got to be a bronze member so we get out all the spam and what have you, but it has its worth its weight in gold in helping you understand this system that I use, the hybrid system, okay? So go tradersreality.com. It's pinned to the top of the chat. That's actually the platinum membership where you get way more detail, trade setups every single day. So go and check that out. And you get a Discord community as well, where those guys are monstrous traders. They do all this stuff all the time. And very good traders in there. All right, then. Tino, do you think we're going to the moon or we're going to hell? In a minute's time, ladies and gentlemen. Then we're going to be looking to see if these orders up here are very important. I want to know if they're spoofs because they could get pulled. But we're going to see it very, very shortly. I've got NASDAQ to the left of me. Whoa, where's NASDAQ gone? NASDAQ is currently trading. Okay, yeah, there's spread on the futures markets. There's a spread on the futures markets. Are you serious? There's a spread. That never happens. It just goes to show how crazy price is right now. Whoa, 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 whoa. Where's NASDAQ? 1312, 71970. Look at the price differences, how they're just very, very choppy, guys. Very choppy. Here we go. Here we go. Are we going to see it? Here is the flavor for Bitcoin. 60,700. Oh, come on, Bitcoin. Just do something. Are we going to get that cut? What is the cut? Here we go. Oh, not liking that. Oh, look at it. It's crashing. Look. Here we go. They're going to eat. Look, it can't keep up. It can't keep up. Look at that. Here we go. Look at that. It can't keep up. Unbelievable. It can't keep up. It can't keep up with it. Look at that. Not even TradingView can handle it. Come on, son. Come on, son. Look at that. Look at that, ladies and gentlemen. Welcome to the madness. Well done, ladies and gentlemen. We've come to a massive... This is before the live stream itself, ladies and gentlemen. Okay, we got to wait for the markets to just chill out. NASDAQ, I can't even... I mean, look. How are you going to trade? How are you going to trade that? How do you trade that? Gaps in the spread. Like, how am I going to take a trade on that logic? Can't do it. I will get outfilled. I'll just get bullied. Well done, Bitcoin. They've eaten the liquidity, ladies and gentlemen. That's wonderful news. They've gone for it. Look, it's up there. It can't keep up. And we ain't even got the press conference. So I'm going to go and have a look. Yo. 50 basis points. Yeah. Okay. Let me just go and have a look at... Oh, shock. Yen has shot up. The dollar has sunk. Euro is gone up. Oh, man. Ladies and gentlemen, be very careful right now. Be very careful. That is nuts. Okay. I can't believe it. It can't keep up with it, man. And that is even before the before the FOMC. I can't believe it. They gave us 50 basis points, ladies and gentlemen. That is absolutely phenomenal. Are you kidding now? So that effectively, look at the order book itself. You can see it's just not being able to keep up. People are going crazy for it right now. Okay. Even TradingView just looks a bit laggard. First move is the fake out. That's correct. It is the false move. First move is the false move. But it's so important that we have effectively had this rate cut itself. It's massively important because it gives us the scope that in the future we could be close to a whole point. Okay. So I really want to do it, but I can't. It's the depth of market is just so bad. Anyone looking at the depth of market right now, you can see straight away it's not stable at all. It is not stable at all. Let's just quickly go over to the order flow over here so it's much more smoother here. You can see right here how Bitcoin is behaving. It's gone and taken out those previous zones on the initial balances in principle. Okay, well, not just yet, sorry. So we zoom out. This is all before, I mean, we got that point up there, 63,000. That'll be an ideal story for us. But you've got to be careful, guys, because 50 basis points, if I just go over to it right now and what they're saying about the statement. So just go to the news a second. We'll see some guys on X coming out with some information. Okay. So here we go. Not really saying anything. Okay. Vote in favor of 11-1 with the Fed governor bowing, dissenting. Bowman preferred 25 basis points. So 11-1. That's awesome. Okay. So the majority of the members of the Fed were like, yeah, well, we need to cut. Okay. FOMC has gained greater confidence in inflation moving sustainably towards 2%. Judges risks to employment and inflation goals are roughly in balance. Okay, we will carefully assess incoming data, evolving outlook and balance of risks in considering additional rate adjustments. Here we go. Here is this discussion about the statement when they pull out keywords. Okay, so here it is right here, if you can see. So we have got moderate slow. Job gains have been moderate slowed, okay, eased over the past year, but remained somewhat elevated in recent months. So removed, added. So these are the words that have been added and taken away. So what do you see? They've been adding. So we've got, well, it seems like a fair distribution of adding and removing, but looking at the words that they're adding and removing, you know what? I just need to go back into the chart. It's pulled back down again. Okay, so we've got to be very careful with this. Where are you at, ladies and gentlemen? This is all before the press conference itself. This is unbelievable. All before the press conference. Tina, will you show Powell's speech? Of course I will. Got ready for you right there, ladies and gentlemen. And we're going to have exo charts at the bottom down here. We're going to have the chart in the middle. And we're going to be listening into what Powell has to say. And that's coming in very, very shortly. 25 minutes time, ladies and gentlemen. 25 minutes time. How many of you are in the live stream? I think we've hit a record, ladies and gentlemen. 4,522 people in this live stream. Mad love and respect to all of you. Thank you so much. Honestly. Thank you so much for tuning in today, ladies and gentlemen. And we ain't even there yet, man. We ain't even there with Powell. And it's going to be very interesting to hear how they are going to work with this. But like I said to you before, be very mindful, okay? The Japanese 10-year right now has shot up in principle, okay? It has moved up. This is a 9-hour chart, but it's pretty much back in the same spot, okay? The yield has come up a little bit, okay? That's not a problem. But the 10-year bonds is doing, where's the volatility index? It's come down. It's wonderful news. Listen, man, I'm really pumped about this. I'm really pumped about this behavior on Bitcoin. I'm really pumped about it. Really good. You know? How many of you are actually playing this? I just want you to understand this, right? Look, I'm prepared to take a trade right now just to show you at why it's not sustainable. I'm prepared to lose money on it. Okay. Look at the way. Okay. So let's just look at the way it's actually, you know what? I'm not going to do it. Look at the price, the yellow bar. I can't even keep up with it. Okay. The yellow bar in relation to the bids and the offers. Look at the gap in between. Okay. It's going to tell me straight away that I could be down like $700 from the second I open a trade. From the second you open a trade. Okay? Now, the S&P is moving relatively decent. Okay? But just even one contract, it's like, just to show you the volatility. This is all before it. So if I just wait a second. This might be a very, very interesting thing if I go to the 30-second time frame. Let me see if it can happen on the S&P, because it's very. I've got the gap down there. Try and take advantage of that. Yeah, I'll take 200 ticks on that. $337 just then. Happy days. Not bad. That's a quick scalp. Before I could even tell you the trade was on, it was a quick scalp. Happy days. $337. I'm cool with that. Just on price going down. Can we take advantage of another move? Keep going. Come on. Mark lower. Go down to the vector candle recovery. Off she goes. Keep going. Keep going. Go, go. There she goes. Okay, we got to hurry up. There we go. 27 ticks on the NASDAQ. Where we at? How much have I made there? 28 ticks. I'll get out. How much was that? Oh, so it's $300. So $612. Okay, I'm finished now. I'm not going to trade that anymore. No, thank you. No, thank you. My heart is racing there. No, thanks. I'm not. No. That was on the S&P. If it was the NASDAQ, it would have been a bloody nightmare. But that's what literally the logic that I was trading just then, ladies and gentlemen, on it was Bitcoin or S&P. Was I looking at Bitcoin or S&P just then? Was I looking at the S&P just then? Yes, I was. Yes. Yeah, so the S&P, trading the logic of, this is the 30-second time frame. I'm going into vector candle recovery points, okay? And just purely off the way the depth of market was working just then, okay? See, the S&P moves slower than the NASDAQ, but it's moving very fast right now, okay? And that's how I trade. But it's moving so slow in comparison to a normal trading day, okay? So slow. But sorry, it's moving so fast in comparison to a normal trading day for me. Excuse me. You see, the S&P, 10 ticks in the S&P is worth, in principle, 30, 40 ticks in the NASDAQ because it's more volume, right? And it takes a lot of volume to move it. But the NASDAQ, it doesn't. You can have like 5 contracts and people are like, oh my God, contracts on the NASDAQ. But 5 contracts on the S&P, you carry more weight with it, okay? But this is why I trade the futures, because we can take advantage of these key opportunities when liquidity is flowing. Look at the vector candle. They were going into, they came down to it. I started to see it. And this is not me at my station. When I've really got everything up and going, I can pull those off all the time. You do lose money and you do make money, ladies and gentlemen. But momentum was coming into play. They hit the news announcements and they've just depleted from there. So logic would say if I'm expecting price to continue higher, because this is an imbalance in the book. There's a huge imbalance. So people that have now gone and bought S&P contracts, they're paying the price right now because the bids have left us a little bit of a clue as to what can happen later. Okay? When you start playing the game of trading itself, ladies and gentlemen, that's me, I'm not doing it anymore. When you play the game of trading, it's not so simple, you know. It's just a tough game. It's the hardest, easiest way to make money, you know? Very difficult. And people take it for granted. People think it's going to be an easy walk for them just because they see someone else do it. Okay, fine. I just did it. Fine, I get that. How many times have I done that? Okay? How many times have I put myself into a situation where the S&P has made a nice move to the upside? Okay? How many times have I seen this happen after the bids have come into play and then the offers have just swept the book? Look, this is Bitcoin, okay? This is NASDAQ. When you consider the way the NASDAQ operates in terms of the way bids and offers work, okay? This run-up usually creates a profile, all right? Now, it could be short sellers getting squeezed, okay? Which they've gone for. But tonight, going into Asia, whatever they've done now and whatever they plan on doing later, especially for Bitcoin and especially for the S&P. I mean, come on, ladies and gentlemen. That's screaming recovery of the wick. It really is. We'll know later on tonight. So the start of this next candle is going to dictate. They could just shoot back up again. But if you want to take that trade, to take the risk in these certain circumstances, boy, you know, you pay to play. That's the name of this game. And you can win some and you can lose some. People ask me, you know, when people talk to me about trading, right? New people. I always say to them, give me £500 and let's go and burn it. What the hell? Why would I do that? I said, don't get involved in trading. What? Yeah, don't get involved. Because if you're not happy to burn £500, physically burn £500, okay, why is it any different when you're trading? You lose it in these charts. Same thing, you're burning it. You can't use it. You can't obtain it. Once it's gone, it's gone. And if you're not okay with that, this game is not for you. Really. And don't come into the game with the idea of thinking that you can only make money. You can lose money. You can. But the art of it is to try not and lose as much. Pick your spots. You know? I did something out of norm there. I don't normally do that. But I wanted to put to the test to show you what my understanding of when we focus on price and certain things. I saw the vector candle, 30-second time frame, started to break down. The offers had come in. And now there's been the bids. If they're preparing for a move to the upside, then they're going to be bidding up aggressively, which then will tell me that they're going to get ready to make a move later on. Okay? Okay, then. Any other questions, ladies and gentlemen? 2,000 likes, mad love and respect. 5%. I can't believe it. Yeah, it doesn't work there. But anyone using BTCC, you can trade the S&P and the NASDAQ on BTCC. So if anyone wants to check this out, you can trade NASDAQ, S&P. NASDAQ is Tech 100, okay? And S&P is SPX 500. And you can trade Coinbase stock, NVIDIA, gold, and silver. It's great if you want to hedge. If you're in a cryptocurrency position, you can then quickly go over to this and open a position in NASDAQ and S&P because look at how quick they move, okay? It's great if you want to use it for hedging. You don't need KYC or anything like that with this exchange. So go check those guys out. Okay, it's in the description if you need it, right? Any other questions? Because we're going to be getting ready for the FOMC meeting very, very shortly, ladies and gentlemen. Any questions? You can lose a lot of money. You can. Yeah, we're going to be getting ready for it very shortly, ladies and gentlemen. Tino, will I ever be a mother? Huh? Okay. Why are you asking me that, bro? Will Bitcoin do a backflip? So I'm a new trader. How much money should I have in my trading account before I join the Platinum membership? Is it only for people who want to trade full-time? No. The Platinum membership tells you my thought process on each entry. I set out 5 entries every single day. That's across 6 asset classes. All right. That means Euro, gold, oil, Bitcoin, Solana, Ethereum, NASDAQ. Okay. And every week I do a market watch where I expect prices to be at a certain point at the end of the week. It talks about macros, which is great for anyone who's looking at for longer term plays and wants to factor in macros. But I do setups every single day, 5 days a week. You're learning the system and how I create setups from it. And the idea is that as you keep seeing these setups, okay, depending on how you take them, I tell everyone to use small size because with volume, you're going to sustain yourself a return later on with volume of trades because you're not going to get every single trade right. That's the fact. And when you trade so often, you are subject to getting it wrong. You are, simple as, especially as scalpers. But it's all about the community in the Platinum membership. That's where it's at. The guys in there, we go in there and we talk on price action. It's NASDAQ, I go in there And depending on how NASDAQ's behaving is going to dictate whether I'm going to start feeding out information about the way NASDAQ is going to move. We had a good week this week, in my opinion. It was a great day on Monday with the NASDAQ. But it's FOMC week, so it's a bit difficult. But listen, if you are new, just go to the Traders Reality website. That's all you need to do. And all the information you need about the hybrid system is over there for you. You've got masterclass sessions. You've got the free course right here. But when you become a member, you get more detail about the hybrid system. You just go to the memberships tab up here, and it shows you get live trading videos. There's a wealth of live trading videos over there where I recorded myself doing live trading and my thought process. So it's all there for you. And I'm busy in there, ladies and gentlemen. I hope that I anticipate that I'm actually keeping an eye out on everyone in there and everywhere else. I'm here all the time, you know? So, but yeah, that's where it's at. Okay. So you don't need to be a full-time trader. What can I say to get the price drop? I read that in the Trading in the Zone book. It was very eye-opening. I felt it was speaking to me at all my faults. Yep. Believe me. I know that for a fact. What would bring Bitcoin to 69,000 after the FOMC meeting? What he should talk about? It's not about what he... Look, we've got the basis point cut. We're at 5%, ladies and gentlemen. That's crazy. So now the dollar has just got that little bit more cheaper. Now we want to know how much of an interest rate cut we're going to get in the future. It always changes, ladies and gents. And the interest rate cut itself now, we're going to know what their plan is. They think inflation is going down to 2%. Well, we're going to know if they truly do believe that. They've said it in the statement over here, okay? So let's just refresh this just for a split second to understand if that's the case. Incoming data, evolving outlook, and the balance of the risks in considering additional rate adjustments. I want to know what they're going to do with this. Has it changed? Let's see. $25634. We're going to know tonight if this has gone down. If this has gone down, ladies and gentlemen, that's going to be great news for us. This RRP is going to help Bitcoin go up. Holders, this is something you want to pay attention to because this impacts the way Bitcoin can move. If I can do this, will it let me do this? If I put Bitcoin's price, Bitcoin USD, add. Okay, so look, the best way for me to do this for you, look at this. When this goes up, okay, the RRP, right? And the RRP itself is the way the Fed balances the short-term interest rates, whether they inject liquidity or not, okay? But as it goes up, Bitcoin struggles. You can see as it goes up, Bitcoin's price drops. As it goes down, Bitcoin's price rises. If this sustains itself and keeps going down, that's a win-win for BTC. Okay? Very much win, as they put it. Okay? So 50 means we are more likely to have a bull run. It means that money is getting cheaper across the board. That's what it means. Now we just need to understand if money is really going to get cheap because this is going up. Don't like it. Don't like the Japanese yen going up. That's a problem. That is a major problem. Dollar has just broken down. It's just broken down 99. Where's NASDAQ? NASDAQ is moving up. S&P swept the highs again. Nvidia, not really going anywhere. Tesla's up 2%. AMC's down. Netflix, big market cap, not really doing too much. The volatility index, trying to come back up again. What's oil doing? Marking up. Okay. Bitcoin at 450 right now. All right, ladies and gentlemen, we're going to be getting ready for the FOMC press conference. Okay, so we're going to get ready for this press conference very, very shortly. In the next 7-8 minutes or so, he is going to be he is going to be talking quite loudly and letting us know what the story is. Okay. Tino, doesn't 50 basis point cut give Japan a better chance to increase interest rates and make the carry trade take place? Yes, it does in principle, because when you look at it, okay, look at the 10-year bonds market. It's moving up right now, okay? So people are going into low risk and they're going into high risk. At the same time, the value of it is just terrible. There's no point in holding dollars right now. Would you buy Bitcoin with your dollars right now? Naturally, you'd think that would be the case. Excuse me. You think it's better to go into Bitcoin because my dollars are deemed worthless right now, but you're not really picking up that much Bitcoin. Forgive me. What on earth is in my eye? Oh, my days. So, yeah, it does make sense, you know. But we didn't get our 80K projection before 8 o'clock. And it's not 8 o'clock just yet, but my logic was, you know, I wanted to see it go 7 weeks ago. I wanted to see it hit 80K before the 8 o'clock FOMC press conference. But we didn't get it, ladies and gentlemen. I was wrong. Okay. It didn't even go anywhere from the time that I said it was going to go up from it. So technically, I can add another 7 weeks, can't I? Because Bitcoin is at the same price that I said it would go up from. So am I right or am I wrong? I'm joking. I'm joking. Powell is not talking for another 5 minutes, ladies and gentlemen. We're going to get it all set up, ladies and gents. We are going to get it all set up. I should have it. I'm going to actually get it set up for you right now. I'm going to get it all set up for us so that we've effectively got that flavor set for you. Okay. How much for the shirt? What the hell? You don't want my shirt, bro. All right then. Now, when we have the conversation with Powell, we're looking for key questions to be asked. I want provocative questions because there's nothing really that they can actually ask Powell. The only next logical question for Powell is, how much more are you going to cut the interest rates? And that's what we're looking for right now. Webcasted, here we go. Here we are. 23,000 people are sat here waiting for this story to unfold, ladies and gentlemen. Yep, 23,000 people are waiting. Oh, my days. And this is exactly what we're going to be looking at. I'll just get it set for you. I'm going to put this over here. I'm going to keep an eye out on the chat, ladies and gents. But we're going to be changing it all up for you right now. So you guys are going to see how Powell is going to be revealing himself. I've got the depth of market right here with $20 price increments. We've got BTC price action right here. And we're now just waiting for Powell to roll out the flavor and have the conversation. Okay. So that should be coming up very, very shortly, ladies and gentlemen. Are we good? 50 basis cuts means fear of recession. Be careful. This is very true. This is what we're looking for. We're looking to see if Powell is going to reveal to us if the idea of a recession is why they've given us 50 basis points. That's why I'm saying it's a bit awkward given that the Japanese yen has moved up. Okay, so just take that into consideration. It's very, very concerning. Okay, so, oh my days, Powell talking. I'm going to crack my headphones. I'm just going to have myself a little drink, ladies and gentlemen. Where am I at? Here we go. All right, then. How much money should I have in my trading account? I thought we answered that. It's not about how much money you should have. It's all about execution. You know, even if you make a trade that's worth 10 cents, ultimately, you take that trade 100 times and you're right 80% of the time, it's not going to matter how much money you need in your trading account. Ultimately, you know that you can grow it because you're getting your execution down. That's what's important. Okay. Powell would not say we have fears of recession. True. What do you see as a key words for an indicator as to what he is thinking? Scope for how much of an interest rate are we going to get cut-wise in the near future? What's it going to look like? Are we going to get 1 point, a whole point cut? All right, 100 basis points. And how long are they going to keep the interest rate high for? And it all depends on whether Powell wants people, whether they want the US. They want people to pick up US debt. That's the key thing. But what you've got to pay attention to, you know, whatever Powell says, it's all about what the Japanese yen does. This is a problem for me when it keeps going up, okay? Because it's telling me that the yen carry trade could be unwinding. Just look at it. Dollar is going down. Yen is going up. Euro is a byproduct of it. It's shooting up, okay? It is shooting up. That happened last time, and that's not good news. 5th of August, go back in the charts and look at the yen against the dollar, against the yen, and against the euro, okay? That could explain why Bitcoin isn't really climbing up right now. Could explain that. Gold. Investors are seeking safety. $2,600. I mean, so close to hitting it. But we're going into it, ladies and gentlemen. Powell is going to be live very, very shortly. Yo, why is this guy copy and pasting so much? Please. But if people are selling out of USD, would they not want to keep rates higher for longer so that countries buy into the government bonds at favorable rates for 10 years? Yeah, but the rates aren't favorable. Look. They're not favorable. And 2 years, 3.5. 10 year is 3.6. You no longer have an inversion. Okay? So the question is it worth going into the bonds now for longer periods of time? Doesn't look like it. They don't. And the only reason they're going into the bonds right now because they're scared. Because this thing's climbing up. Tomorrow is D-Day for me. Friday's D-Day for me. That's all I'm waiting for. Friday's D-Day. And so is the FOMC. Ladies and gentlemen, let's tune into it. Here we go. Welcome to the FOMC, gang. Let's see what Powell has to say. I love this guy. For anyone new, down here is Exo charts. This is Bitcoin. Here's the boy. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years.
Okay.
In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished, and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance.
Cool.
And we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting.
No.
We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
All right, ladies and gentlemen, this is where it gets very interesting with the questions. CNBC, Steve.
In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank
Critical
you.
question.
So
More
a lot of
50s.
questions in there. Let me jump in.
It's the first time I've heard
since the
anyone
last
laugh.
meeting- Okay, the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple
He's got to be
things.
careful here.
A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time, but realistically, we know it by its works. So that leaves us in a place where where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level, so that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral, and we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was
Reuters.
this in terms of a decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. You know, if you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, you know, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Yeah, we're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this.
So we got
made a
50
good,
basis
strong
points
start
for
to
a little
this,
while.
and that's really,
For a little while.
Frankly, a sign of our confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, you know, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
I hate that. Gina.
Hi, Chair Powell. Gina Smilik with the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections see the
Gina.
unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing.
Sorry,
so
guys.
If you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in a solid condition. And
That's
our
big.
intention with our policy move today is to keep it there.
That doesn't
You can
make
say that about the
sense.
whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
She feels awkward after that. He just lied to everyone. What are they talking about? Look, it's all so
Wall
quiet.
Street Journal. Chair Powell, does
Here we
today's
go.
action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Just say you're going to increase them again in the future, bro.
Multiple questions there, but so.
That's what I
would
mean,
say,
man.
We don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So
Overnight
I think what that tells you
RRP.
is we're
Yeah.
not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Sorry.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a really
lowest in 50 years.
So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person. As measured, it's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, that could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months, and so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of.
No, we don't know, Powell.
Incoming. data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think, what's the right thing to do? Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Neil.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payroll the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment.
Not giving me anything.
It's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
No one's actually asked
Edward Lawrence,
a
Fox
good question. Fox.
So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And
Okay.
it's basically an entire generation that has experienced zero or near zero federal funds rate. Now some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
Great question. Here we go.
Question. You mean after we get through all of this? It's just great question that we can
we know.
speculate about.
Come on.
Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates, and it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
And one more, how do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivation?
Nice.
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group. And then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed. And I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind, and it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Joe Ling.
Thank you, Chair Powell. I'm Jo Ling Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
Wow,
I'd
man.
just say that, the
That
U.S.
blows
economy
my
is in a
mind.
good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy.
Another question.
And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Come on.
Just a quick follow-up to that.
Love the
Listening to you
follow-up.
Talk about inflation moving meaningfully down to 2%. Is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
She is
No.
fire. My God.
So inflation,
Don't.
what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see
Get
it
off, man.
be, around 2% and close to 2% for some time.
Give us the follow-up.
We're certainly not we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
He's rattled. No. We may as well end the live. Katerina, who's this?
I just would love to know kind of how the committee is thinking
Oh,
about
she's new.
The persistence we've seen in housing inflation.
I'm gonna get boring
do you think
questions
you
now.
can return to 2% with housing inflation where it is? Yeah.
So, housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels, but they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this, but the direction of travel is clear, and as long as market rents remain, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking
Stop
about
coughing,
July.
man.
I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not, that doesn't really answer the question that we ask ourselves, which is let's look, at this meeting we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth. Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint.
What a question, man.
I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. The
economy's fine.
Intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course. And of course, people are experiencing high prices as opposed to high inflation. And we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. You know, the Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President
One of the most
John Williams,
hawkish
that
guys
they
on the
were-
Fed.
They were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? You know, after the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what
That
we
was a
think is the
trader's
right thing
question.
for the economy at that time. That's what we'll do. And that's what we did today.
And that's your response?
Simon.
Oh, what a guy.
Thank you, Chair Powell. Simon Rabinovich with The Economist.
Damn.
You mentioned how closely you're watching
She
the
turned
labor
around.
market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
He's not
We
mentioned
will
the GDP
continue to look
revisions.
at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
Questions are getting dead now.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors
This
in.
guy
But,
looks
in general, can you talk about whether or not you believe a
very
sitting US
interesting.
president should have a say
Looks
in
high,
Fed
man.
decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world,
Don't get into
countries that are
politics.
sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think
great
the
question.
data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, continue.
Interesting.
Kyle.
Stop coughing, man. For God's sake, have some water,
Kyle
pal.
Campbell,
Come on.
American Banker. Thanks for taking the questions. Chair
Here we
Powell.
go.
A couple regulatory developments in the past week that I want to ask you about.
Napoleon
First,
Dynamite.
Last week, Vice Chair for
Remember
Supervision, Michael Barr, outlined his views for the changes to the
Who is
Basel
this
III
guy?
endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for. And
No.
I think the other agencies are also.
I want to know
on board
what
with
Pal's
that
thinking
approach.
right now.
And then yesterday, other banking regulators.
You know what? Hold the second question.
Okay, sure.
He ain't taking
I'll give
it
you the
seriously.
second question.
Hold the question. He's never done
The answer
that.
to your question is that.
Wow.
Yes, those changes were negotiated between the
funny.
agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
And is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to
Bringing
take
in
comment
flavor
and make
then.
appropriate changes.
Fair play to
We
Napoleon.
don't have a calendar date for that. And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
Right. And then yesterday there were
More.
merger reform finalizations from the other bank regulators. Well, what does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't
Nice
think
questions.
So.
Oh,
I
okay.
don't, as I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No, thank you.
So the US is not going to a recession. Ladies and gentlemen, wow, that is level 1000, just cut the stream and that's it. Oh my days. I can't believe that. He just practically told everyone, that's it. No recession. I just walked off. That was what an exit. So, ladies and gentlemen, first things first, let's just have a look at what's going on. Bitcoin makes a nice little move up. Now the markets are pretty much solidified. NASDAQ itself is now trading lower. Stock run to the upside. Couldn't quite take the 20K. S&P itself at the all-time high, so only reject that point. Looking at the dollar dominance, it made the move up. Now it's still in that exact same zone. So effectively, the FOMC itself was just a waste of time. We saw a little bit of movement, but now we're going to see the true flavor of what is going on in the chart. So with that being said, ladies and gentlemen, moving forward, okay? You're all going to start seeing the news articles that are coming out on people's opinions on what they think is going to happen next. He just told us that we're not in a recession, that the US economy is strong and everything's all good. Employment rate is doing fine at these low levels, which is true. It's only at 4%. All right. If it was at 6%, we'd have a different story, but it's been the lowest for over 50 years. All right. Now Biden would take his claim to that, saying that was because of him. Okay, cool. But looking at where we are right now, we have still got the Japanese to come into play, okay? And quite frankly, that meeting itself for me, it just basically, it kicked ass in the sense where, yep, we gave you your rate cuts, happy days. The economy's doing fine. But 5 months worth of contraction in the manufacturing sector, which is what I was looking for earlier on. How is it that the economy is doing fine? That it's contracting for 5 months. Where is it? Where is my manufacturing index? Here we go. Flash PMI. Not that one, not the ISM, although that is the best one to look at, to be fair. It's not consistent. It's just 50, then down, 50, then down, 50, then down. It's just, even the actual other manufacturing sector, it's, what's that doing there? Yeah, it's just not making sense. How is he saying that the economy is fine and we're not going into recession? It could be motivated by the election, all right? So, did you enjoy that, ladies and gentlemen? Firstly, mad love and respect to everyone who's liked the stream. We've nearly hit 3,000 likes, so that'll be happy days. And of course, guys, if you are new to today's live stream, I won't be going live tonight because this is your live stream in principle. But we will be going into the Asian session this evening, and they too will get the initial reaction to what has happened today, all right? Moving on, if you are new, get over to tradersreality.com. We've had a decent live stream today. Really happy with it. We've had a lot of flavor going off in the charts. But just make sure now that we know where we stand with the interest rates, now we can start trading properly. The biggest event has happened, so we don't need to worry about anything else other than the Japanese yen. So be sure to like and subscribe. Check out tradersreality.com, and everything that we've mentioned in this live stream is in the description. Mad love and respect. Have yourselves a wonderful evening, guys, and I'll catch you with you tomorrow.